All right, guys, welcome back to another episode of the Black Bullion Show. In times of increased interest in gold, the metal is still misunderstood now more than ever. You think that with all of the attention both gold and silver have been getting on mainstream news media, the research behind both would improve. But I want to respond to an article I saw on Fox Business that appears to be well-meaning, but honestly it's filled with some backhanded compliments for the yellow metal. Now, before we get into that, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Now, we have this article from Fox Business entitled "Gold Will Need More Bad News to Keep Prospering." And here's the tagline or subheadline: "If an economic recovery continues, expect the precious metal to suffer." Now, I don't like to just do these videos to hate on a writer. I put them aside and I think more so about you guys who may come across articles like these and would like to hear an opposing view or a view that offers a bit more clarity on the matter. So first, we'll talk about the writer's view on gold and what appears to be an opinion on the dollar and other fiat currencies. So let's take a look down here and we'll get started right around this paragraph here. "Something else is going on, and for Michael Howell, CEO of Cross Border Capital, it is a broad asset price jump driven by what he calls monetary inflation, or the devaluation of fiat currencies. Everyone says the gold price goes up, but in fact, the dollar paper price is going down. Gold is a fixed stock of wealth," he says. "This might not appear in retail price inflation the way it did in the 1970s, depending on what happens with oil, trade, wages, and broader production costs." And then they finish up by saying, "I don't share his belief that gold has some immutable value against which everyone or everything else is measured. And I think the price of money, the interest rate, matters much more than the quantity." So, one, this person is not understanding the general principles, or maybe does not accept the general principles behind the monetarist theory of money supply multiplied by velocity equals nominal GDP. In effect, when you have inflation through this view, you'll often hear that old adage with people saying there are too many dollars chasing after too few goods. And when you take a look at the true price of gold, i.e. the physical product, you'll have to add on the rising premiums which come from a squeezed supply chain. Now, yes, the premiums for gold have gone down a bit, but we have more dollars chasing after fewer goods in the gold market. Now, and this doesn't just have to include gold, actually, guys. That's the interesting thing about the monetarist theory. You can insert any product and solve for a change in price using the quantity of money stock of M2, velocity of M2, and the quantity of the product, the money stock of M2, and the velocity of M2. So yes, items don't have an intrinsic value. Dollars just seem to devalue or essentially devalue against items for decades, causing a rise in prices, including gold. You can look at that with any general item. If you go to a gas station or some kind of tourist shop in an old town, you'll often see those pamphlets that say these were what prices were back in 1980 or back in 1970. The same concept can be used for any product, not just gold. Now, let's talk about the writer's view stating that interest rates are more important. That's not necessarily true. It's just an additional data point that explains more of the same. So check this out. How does money supply affect interest rates? Here's a quick highlight. All else being equal, a larger money supply lowers market interest rates, making it less expensive for consumers to borrow. Interesting. So let's see how that bears out with a quick look at M2. So this graph goes as far back as November 3rd, 1980 for M2, and to the present, or as far up as August 3rd, 2020. And M2 has essentially been rising. Now let's take a look at the effective funds rate, federal funds rate, and basically since 1980 it has been trending downward. So again, focusing on interest rates as being more important than the growth of money supply suggests that these two data points are somewhat independent of each other or don't have a strong correlation, when in fact the relationship is actually causal when all things are equal, and that's according to Investopedia. Now finally, the author ends their article by stating that gold really needs more trouble to prosper. Now, it needs more, essentially bad news to prosper, and that's not necessarily true. It does definitely help when gold has bad news, especially in the near term for those sharp rises. But again, over time, the money supply has played a great role in keeping the gold price elevated. Additional bad news stokes that fire, but with guaranteed QE infinity, gold will be doing just fine in the long term, as it has been for decades. So guys, let me know what you think. I don't know if you saw this article, if you've seen articles that kind of tout the same thing, but at the end of the day, in the near term, bad news definitely helps gold prices go up. I'm not disputing that. What I'm saying is that over time, the money supply has played a great role in price increases, not just for gold, but for almost any product you can think of over a long period of time. Look at gas prices. Look at the price of a hamburger. Look at so many different items you can think of that have changed over time, and it's partially due to the increased money supply. Now, thanks again for watching. Let me know what you think in the comment section below. Please give the video a like. Please subscribe if you're new. It's Black Bullion.